Good morning, guys, and welcome to the Camp Financial Stock Market Update for December the 23rd. Um, so, I've heard a very interesting, um, point be made um, online. Actually, I shouldn't say I heard it, I read it on Twitter. Um, but it seems like a pretty feasible um, response or reaction to what's going on right now in the markets. Um, Obviously the market's been up. It's tested almost 20,000 a couple times in the Dow, and it's dropped back down. And yesterday really ended up being pretty much a flat day. It was down 23 points, 0.12%, and never got up to where it started the day at. But the thing that I read, and like I said, when you first read it, you think, well, why would the bulls want to do that? But then when you really dig into it, you figure out, well, that does kind of make sense. So essentially, what it says is that the bulls in the stock market are trying to hold the price below 20,000 until after the first of the year. Everybody is expecting tax decreases next year, so they want to keep the market down until we get the lower taxes, and then they're expecting it to roar in January to shoot through 20,000, and who knows where it may go up to from there. But that's kind of the um, talk that I heard from one guy, or like I said, it was a tweet, but like a tweet that I read from one guy that I thought, that sounds crazy, but it kind of makes sense. I mean, we're talking about the one thing is, obviously we're talking about lower taxes, which is going to help everybody, but it's definitely going to help traders. But on the other side of that, it's like the lower taxes is not a guarantee. I mean, yes, I understand that that's what the president-elect ran on, and yes, I understand that he has a Republican House and a Republican Senate, but I mean, I wouldn't bank on it. And I guess but so then to look at the other side of that is, well, yes, if the taxes would come down, it's going to benefit. If the taxes don't come down, then that's all right too, because you start 2017 off roaring, and and it's okay. It's not going to be, you're not going to pay any more taxes. I mean, taxes aren't going to go up, so delaying it till 2017 to have it shoot through 20,000, I guess really doesn't hurt either. So all right, so that's it for that. I just thought that was an interesting tweet, and I felt like at first I thought, well, that sounds dumb, and I thought actually it kind of makes sense, and then I'm back to, I mean, I guess it doesn't really matter. You're gonna pay taxes anyways. I guess it may be a little bit less next year, so it does make sense to go ahead and delay. But all right, so we talked about how much or what the Dow did yesterday. So the Nasdaq also started off at the high for the session and never got back to it, and then up down 24 points, 0.44%. S&P 500 down 4.22 points, 0.19%. Two companies, two fairly well, one fairly large size company, the other pretty well known company, Cintas and Cal-Maine Foods, both reported earnings last night after the session, and both reported lower than expected. So we'll see them probably sell off in the morning. I know Cintas was selling off in after hours. My guess is Cal-Maine Foods did too. But we'll see more later tonight after earnings or after the session. I have a very small restaurant company that I bought shares in a while back. It's ARK Restaurants, ticker symbols ARKR. They'll be announcing their earnings after hours. So the last time we go pull this up on my one system and take a look and see what we got here. So I actually purchased this back in September of 2013. And what do we do here? So I was letting it run, letting the dividends accumulate, etc. Sold off my initial investment back in January of 2015, and I've kind of let what was left run and continue to collect the dividends, etc. I know ARKR had talked at one time about a buyback, so and they've also discussed increased dividends. So it'll be interesting to see what comes out of their earnings report. But I can tell you since January of 2015, when I sold the initial investment, it's went up and down. But right now we're essentially at the exact same amount. It's 60. I've made 65 cents on $112.15 since January of 2015. So obviously completely flat. Haven't made any money there. Continue to collect the dividend, and in hopes that eventually, when it does get some price accumulation, or that it'll take off from there. So I'm interested in reading that. And then I also saw one of my new purchases actually yesterday. That was Greenbrier GBX. We talked about it before, but on December 22nd, yesterday, they announced that they're going to do their first quarter conference call on Friday, January 6th. So I'll try to dial in and listen to that. If I can't at least dial in and listen live, I'll go back and watch that video later on in the day, just to get a feel for what they think. But I don't know if I even talked about them, but what they do is they're essentially they do railroad, freight car construction, refurbish, etc. They assist the railways in getting cars out there. So let's jump into the heat map real quick. We're going to try to keep this right around 12 minutes. I feel like that's kind of a good amount of time. So if I can get the heat map to come up here, and actually while it's coming up, I can take a look at the smaller one and kind of give a little feel. Service sector yesterday was down. Pretty much anything retail was pummeled yesterday. Walmart down big. Target 2.5%. Target down more than 3%. Limited brands bright red. Can't see all the other ones, but I do see like McDonald's is pretty much flat. UPS up a little bit. Disney just slightly down. And the financials again pretty much flat. You see a little bit of red in there. Consumer goods has some green. Looks like we got some green in the healthcare and the basic materials sector. Utilities again basically flat. A little bit of green there. Up in the tech sector, you've got Google sold off, Facebook down 1.38%. I do see a really bright green down in the corner, but it's a small company, so I can't tell exactly. But we did get some gains in the large telecom players. Verizon up 1.38%, AT&T up 0.85%. And I think a lot of that is still, you can still get more yield buying AT&T and Verizon than you can get from buying bonds. So people are still kind of looking at those as essentially a utility stock for them, where they're not very concerned about price depreciation in the stock. They're really just looking to accumulate that dividend payment. So those are still going to kind of hold out as some strong options, at least until bond prices or bond yields go up a little further, and you see some of those people more concerned about their monthly income start to sell out, and then you'll see those stocks drop a little bit. Let's come back and take a look in the systems real quick. Nothing hit new highs in the last, this week at all. Unum Group is definitely still doing real well for us. We bought in at $33. It's at $44.53. It's just 50 cents off of a high. Let's look at the other one of my other systems here. Obviously, Bank of America, we've talked endlessly about. Bought at $15.71. It's at $22.54 with a high of $23.39. Pretty much all of the stocks are within about 5% of their all-time highs, or at least highs since I purchased. So those are all running pretty well. There's one stock that's in the oldest system that I've been using, quantitative, where I look at quantitative, fundamental, and technicals, and it is currently about 5 cents. Yes, 5 cents from the date, or from the price that we want to get out at. So if it hits that, that'll give us another, it'll be about $1,000 that we'll put back on the side in cash, and help us, look for our next investment. So then we'll start looking for what our next purchase will be once we get that cash back on the side. So that's it for today, guys. Take care. And this will be the last video before Christmas, so have a Merry Christmas. Again, if you have questions, feel free, send me an email, chrism@campfinancial.net. You can also tweet me at @cmelik, and find me on Facebook. Find me as Chris Mielik. I also have a business page on there, but I haven't really got that running yet. I've pretty much been posting through just my personal page. So that's it. Take care, guys, and we will see you next time.